Good to see everybody back. Okay, I'm gonna take this one down because I want to share this the big screen. Let me fix my screen, guys. I'm gonna have to go through these other ones over here so we can discuss stuff. Okay, so let's put this one up for now. Let's see if I got this one. Hang on, guys. I'm gonna fix something real fast. Master chart. There we go. Let's get this master over here. I don't need this on because I'm not going to be trading while I'm doing classes. I don't do that ever. Okay, so we're good. Now let's go back over here and hit the stream button again. And I think this is it right here. Nope, that's not it. Where did it go?
Yeah,
this is it right here.
Go film.
Yeah, there we go, guys. You probably can see it now. Okay, guys. So everybody's here for class. That's awesome. Oh, look at that. Oh, look at that. That's Josh. Shit. Hang on. I got a question for Josh, guys. Let me go text him a question because I wanted to do something I forgot to tell him. And he's probably gonna want to see it. So. All right, guys. I sent that off to him. Sorry. Okay, so welcome to class, guys. What a great day today. And if you're all here, please let me know you're here by saying you're here. Because I don't know who's here and who's not, because people might be still here for the rest of the day, but I don't know if they're here or not. Kind of gives me a way we know who's here. Okay, so we got 1, 2, 3, 4, 5, 6, 7, 8. So that's good. Cool, guys. The reason I'm asking who's all here because I got a surprise at the end. I got who's here and who's not. So just let you know. Okay, so we figured we're doing class, guys, and we wanted to go. Somebody had a question. I think it was M3 that I think you were the one asking about the phases, right? The market phases. I think that was you asking about those today. I'm pretty sure that was you. But let me see if I can bring this shit up for you guys. No. Okay. Okay, good. So we're going to cover that real fast. Well, not real fast. It's going to take us a minute, but we're going to cover it. Okay. I'm just waiting to look at the phase and markers. Okay, so basically, guys, when you look at this chart, okay, so here's how you guys can do this with me every day and use this chart on your chart. Okay, I can bring this chart up and let you guys use it, right? But if I let you use it and just look at it, you won't learn it. But if I let you use it and you draw your line across here, you're going to know it, right? So you're going to want to draw your true value line, right, in the market. So the true value line right now is 15,110, right? That's 110, 111. But let's just say 111. So 111 is the top of it, okay? 110 is the bottom. So just say 111, okay? So this is your true value line across here from right here, okay? So what happens in the market, guys, is right here, okay? Let's go back and look at this morning. So this is a better example. This is a beautiful example. So you got your true value line coming in. This true value line is where all the market makers are sitting, okay? So what they want to do, guys, is they want to come out of contraction, which is a sideways market. You can say accumulation, okay? But we know it's contraction to accumulation, okay? So once we come out of accumulation zones, that's why I tell people always mark your accumulation zones, okay? So you mark your accumulation zone, right? And she goes above your true value line. right there. That's phase one. Okay. Well, actually, phase one is the contraction. Okay. So phase one is this. Okay. It come down into here. Okay. It did never cross back over phase or to try to get expansion. It never tested this for phase two. So this is all just phase one down through here. But when it dips back down into this area down into here, it's different. So this was just like a phase 1, 2 done. Okay. This one's contraction. It did do phase one right here. Okay. It did. And then it did phase two under. Okay. Then it came back up over right here on phase two. Okay. Went right back down into the trend phase right here. This is a significant answer for a trend phase right here. As you can see, went back to contraction, exploded out. And this is exactly why this happened here today. So phases in the market, guys, are contraction, accumulation, a phase above, a phase below of your value line. Okay, that's how that works. So basically, what you're going to do from now on, guys, and I'm going to show you all how to do this. Every time, let's see if I can bring it up. Let me go find this and I'll show you. Okay, so we'll do this. And we want this right here. There. And I do think this is it right here. Let me load this thing and see if it'll come up. Yeah, I don't need all that crap. I just need this one right here. Okay, so here we go. Right here, guys. Okay, so basically what you're going to do, guys. Okay, so let's say the market does this. You're just messing around, the market's going up, right? Okay. Let's say you get candles. 1 candle, 2 candles, 3 candles, 4 candles. You might have one like this. 5 candles. You might have one that just tops here, 6, 7, 8. Let's say you got all these candles. This is contraction. Okay. So you're going to mark this contraction level. I want you to draw a box around the contraction from now on. Draw your box around it. Come to the middle of it and draw you a line, just like this. Okay? Every time, guys. Every time. Now, you're setting yourself up to know what I know. Okay? And you're going to be able to follow me in these contraction areas. Okay? You guys see this? It's perfect. So now what happens with this, okay, which I got the other chart there. I can't figure out what the hell I did with it. Okay, so anyway, what happens right here, okay, you're going to have this happen. You're going to have the market's going to kind of go right here, right? And it's going to kind of fall out of this. You know how the candles kind of fall out right here, kind of come under, okay? It's going to come down to here like this. But then the market's going to go back and retest this. And it's going to come down, right? And stop. And it's probably going to go back up through here just like this. And then it's probably going to go doom, 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 right on this line. And then kind of go, all these weird little candles, like all these little candles will be here like this. Then all of a sudden you're going to get a candle that does this number. But the body's going to be down here on that candle. You're always looking for this candle to peak out above all these candles. Okay? On this contraction line. You're always looking for this one with a big wick. Every time with a big wick. You're going to have a big run-up candle first, like this. Big bottom candle is going to come in and run. Then you're going to get that big wick candle next. Then what happens? You drop down through. Okay, or you drop right here. Back into it. Right? Then it'll drop under. Like this. And it'll go like sideways. It'll come back up and go sideways right here. And it kind of go like this and peek through. Once it peeks through right here, as soon as this candle closes right here, you're off to the races, guys. You're going to go straight up from here. Straight up. It's a big move every time. Now, why is this? Okay, because this is contraction. Contraction comes down, goes back up. This right here is called expansion 2. This is expansion phase. Okay? This is your expansion phase right here, guys. This is phase 2 expansion. Which I didn't spell it right. Never mind. Anyway, it's supposed to be up there. It's supposed to be SE. I guess I got it right. There's an H in there. I got it. Okay, so I got it right. So this is your expansion phase off this big candle right here. This was the one it's going to come to right here, right there. This tells you it's expansion phase 2 right on this candle. Okay, so it's going to drop, right? It goes down to here. Okay, see that drop? Then when it does drop, and this candle right here is going to be one of these little candles that has that wick on it right here. Right here, guys, there's going to be a little candle that comes right through here that's higher than the rest of these, more than likely, but doesn't close above, but peaks out above. And then you'll see another one over here and probably do the same thing, the peak out above. And then you'll have another one peak out above. Or maybe even get just barely start to come above it right here. And then this will happen. Now, what's this called right here? This is called phase 3. But this is called your trend phase. This is where the market starts its trend. Every time. You guys understand that? It's pretty cool, isn't it? These are the phases of the market: contraction, expansion, trend. Contraction, expansion, boom, trend. This is how this works. Anything that closes above this blue line, guys, will always try to find that trend phase. Okay, what we call the true value line, which is this line right here. If I went like this and just drew it across, this is called, true value. That's this line right here. Okay, that's your true value line of your market. Okay, you're looking for a market with a true value line to come in. Now watch when we do this. You see my example? Look at this shit. Here's your example. Contraction, right? We came above. We tested. We came back. There's that crazy little candle right there. Come back up. Right there's your expansion. There's your expansion 2 phase. Come back down trend phase, and boom, gone. There it is. You guys see this shit? It's perfect. It's beautiful. So you can see what we just drew, guys, is a perfect example. Okay? Oh, shit. Let me go over here and grab this thing. This is a perfect example of this. It is. Because you have right here. You have it right here. Contraction. And come up. Phase. Right? Contraction phase. Right? Phase 2 down. Expansion. Phase 2 expansion back up. Top of a candle is bigger than all the rest. Is right here. Right there. There she is right there. Okay? Came back down right here to complete that secondary expansion. Come right here. You got the candle that went crazy right here. Like I said, it peaks above, starts above it again, and right here it is, guys. This is the candle that closed above this line for your trend phase. And there you go. There you go. Blue shot.
Guess what it is?
What is it? That's awesome. So this is how you tell this, guys. Now, this is how you do this. Okay. Now, let's go back to our board, which there's things you need to know on this. Okay. But I do believe this will help you guys in learning how I trade and what I'm looking for. And this is something I never really thought I'd share with anybody, but I'm going to share with people because you guys need to know that there's better ways in this market to do this by what they're giving us. You know what I mean? So let's get rid of this crap. So we're going to get rid of this one, because then we're going to go back over here and grab this one. Now, let's say the market is doing the same thing, right? Okay. So we want to do this time. We want to have our little candles over here. Okay, let's just make them all back through here. So we know this is it. Boom, right here. And we're going to draw a line right in the middle of this chart. Okay? Kind of like a paddle, doesn't it? Okay, so this is what we call right here, guys. There's only 2 examples I'm going to give you. When it comes above this like this and goes like this, you got to wait. The body's down here on the candle. This candle's kind of like right here, guys, and the body just kind of goes and kind of takes off through here. know what I mean? Like this. And then that second candle kind of just runs up like this, but the body's down here also, like down in here. Okay. This right here, the body's this low on this big candle. This right here, okay, is called, oops, shit. I can't hardly do this with my mouse. It's called a weak hand reversal. Okay. This is what it's called. I'm just going to put weak hand again. I know it's terrible to read, but anyway, it's called a weak hand reversal right here. Okay. Now, the higher time frames really work better on this, but the lower, I'm so used to lower, it's easier for me to do. Okay. So basically, what happens is the candles go like this, then you get a candle like this, and then you get one that comes under here. You know, this candle comes to here, then this candle kind of goes through, right? Then this candle comes underneath and does this, right? But then you get the retest here, and here, and here. Okay. Now, this line is also called the true value line, right? But it's also called a sweet spot. Okay. A sweet spot. And the reason it's called a sweet spot is because when it comes back up and retests this, guys, let's say it comes up with a big long wick candle off this bottom and pulls all the way back up, right? And let's say that body of this candle is down here. You've seen these stupid little candles, guys. The body's way down here and it comes way up like this. That is a sweet spot that we're looking for. We want that candle to test this. Because what happens? The next candle opens up right here and goes to here and goes straight down. And then you got this, then this comes in. It goes down again a little bit. Then this kind of goes sideways for a minute. It gets to right here and it drops. Okay, this candle, when it drops, is called what? This is called a weak candle reversal. Okay, because it gets down here to a bottom target. So the target's here, we hit the target. This is called a weak candle reversal. This is telling you that this is going to reverse. Okay, normally when it reverses, it'll be a big full candle. The candle that reverses coming down will be one of those candles with no wicks on it, kind of like one of those big ones like this. It might have a little tiny wick on the top, just a little tiny wick. It'll be one of the big giant red candles coming down. So when it stops, the market will do this. Start coming back up, right? It'll just try to get back into here. But eventually what will happen is, it's going to try to go back up. Now, what I mean by this is I'll do another one for a second. I just want to show you this, guys, on the shorts. So on the short side of this, I'll explain it to you how this works on the short side. It's the same way, guys. You're looking for it to come up in your contraction, phase 1, phase 2 down, right? Like down here's phase 2. Go back in, but they didn't get their trend phase because this never broke above this line for the trend phase to start. So where does it start? Right here. So this would be what we call the trend phase right here. Trend phase, it's not a P. Trend phase, well, it's okay. We'll just put it like this. So trend phase is right here, and it comes down. So you're looking for a candle to be closing under this line for your trend phase. But you got to make sure that if it starts testing this line, you got to make sure you get the break of that close. Because it won't never work if you do, because 9 times out of 10, it could come all the way across this thing for hours and do this, and then kind of go boom or boom, right? So you guys understand that? You guys got that? No, this is not a 40 MA. No, this is a contraction phase line. Okay, so here's what you're going to do, guys. I want you to go in your charts, just like this. I want you to go in your charts, guys, right now. Everybody go to the chart and find this. Okay, let's see where it's at. I can go find it with them. So, what did I do with it? What did I do with my chart I just had up here? It's right here. Okay, so go look at this right here, guys. Go look at this box, or this one here. Go look at the box at 320. Everybody look at box at 320 and draw you a box at 320 across here. Just draw your box across these bottom candles right here. Just draw a box around all these. Just draw your box out here. Okay. Then go to the center of the box and draw you that line right there. Okay. Draw your box all the way out to here and just draw your line. Okay. Now when you do that, you're going to see this. They're going to draw you a box just like this around it with your chart. Okay? And put your line in the middle. Oh, it's not really the middle, but it's close enough. This is going to be your true value line. Okay? Now, on true value, why do we call the lower time, on the higher time frame, guys, it provides a more stable direction when using this. I'm just telling you right now. Okay? Lower time frames, though, creates liquidity at favorable prices to enter the market on trains. Okay, there's a difference in this. No, the time bar doesn't matter. You should be using Heikin-Ashi candles with this. You probably should be. You can use Rinkos with it too, but I prefer Heikin-Ashis because they're accurate. They're more accurate with this time with this. And if you use this on a 15-minute or a 1 hour, you guys are really going to see the difference in your trade. Okay, or a 10-minute or something like that. So, okay, this right here, guys, why do we always say contraction? Okay, contraction is what the market does. Okay, because expansion phases on higher time frames become active right here. Okay, and they go up. Okay, weekend reversal comes in, it goes down. The controlled sweet spot hits here, boom, you get the weekend reversal down here. She comes back up to the true value line and she breaks out again. But now on the other side of this, let's say on a lower time frame, okay, here's a contraction zone. Okay, so we come under the contraction right here. Okay, just down here, all the way down. Now, this right here will be considered. Let me get my board to go down. I guess you can. Okay, so then she kind of goes, just a little bit back up right here. Okay, then it kind of goes sideways again, right? And got all stupid looking over here. Right here, guys, when it does this, in the middle of this sideways, this is not contraction all over again because you've already got your value line. What this is called after your contraction phase, okay, this is a contraction phase down, right? It is. But this area right here that you're playing in is trying to drop, right? And we know this. Okay, so it starts happening right here to signal that you're going low, right? You know you're low already. Okay, so when it comes over here, guys, and we see it do this, boom, 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 right? These two areas, this area and this area right here, are what I call, and the market calls, LYI. You've probably never seen this term in your lifetime. Anybody know what the term means? Anybody? You don't mean love your institution. Close enough. It means liquidate your inventory. Why does it mean that? Why does it say liquidate your inventory? Why do we do that? Why do we care about our inventory? Because here's why we care. Because I'm taking a short under here because it's under this line, for one. Okay? And a lot of times what will happen, guys, especially on this one here, guys, what this market will really do is come back up here from here. It'll test this. And you're going to get this is going to be, not this right here. We'll just make a candle. So it's going to be a big candle down, kind of like this right here. And there'll be another big candle down right here to this level right here. So you're going to have like 2 or 3 big candles right together, okay? Then it's going to come across. And it's going to be stupid and go back up and act crazy. It might even have a little bit of a pullback over here, just a tiny bit. Then it's going to fall like crazy, okay? What they're doing here is we're taking the short here. But when we get to here, guys, we're going sideways. We're liquidating our inventory. Means what? Okay, I've got 10 contracts, 10 times right here, going short. I'm liquidating here. Okay, I'm cutting my contracts down to what? 5 across here, 5 times. I'm liquidating inventory by taking out contracts before this thing goes to here. Okay, just to be on the safe side that I'm not going to get killed on the spring bounce. Okay, because that's what's going to happen when you hit the target down here. It's going to go back up on you. So we liquidate our inventory down to 5 contracts. We come over here and boom, we get the profits, we get out. As soon as we get out, what happens, guys? As soon as we get our profits, boom, big candle comes in.
Johnny.
नहीं जाना आज नहीं मैं जाना मेरा लेक्चर है सॉरी babe.
I'll see you later, alligator.
See you later, alligator. Okay, so anyway, so every time we come down and take profits, guys, at these levels right here, okay, we come down and take a profit. We always see a candle come back, don't we? And 9 times out of 10, it does a big reversal right here. And then what does it do? It starts the same thing, goes up, screws around, tries to come down. Because the move's over. This move's done. And we know it's done because we liquidated right here and we took that profit. We don't give a shit about this over here. We don't even care because we just made our money right here. Okay. We just took, 40, 50 points here. We came across. We took another 40 here or 30 here. We're 65, 70 points up on a big market. And that's how you do it. It's called liquidating your inventory. No, it's not. Liquidating inventory also can be done on this. It's the same thing on the other side of the market. When you come into when you see, let me show you what I mean. Let's see if I can find this damn thing. When we see this happening, guys, we know. When you see this happen, everybody's scared of this. I love this shit right here. When you see accumulation coming in or distribution coming in, when you see this, it's like, wait a minute, man. Okay, what's going to happen here? Okay, most of the time you're going to get this, the market's coming up to here. Okay, to go down. Okay, most of the time, the market will come up before it distributes down. Okay, if it's coming down into this, the market will reverse and go up. See what I mean? This is what you look at. You look at a downtrend in to here to go back down. But sometimes it don't happen. They have the downtrend to come in that actually goes back and fools everybody. They sucker people and they take it long. Sometimes you come off a big long trend and then, she comes into here. They think it's going to distribute and goes boom, even higher. Or they get right in here on the true value line and it comes up here and tags this and makes them think it's going to go long and boom, just absolutely done. So there's things you can look at here on this thing here, but it's really kind of cool to use it, but that's how you're supposed to use it. Now let's go to another part of this.
Hey, Mike.
Yeah.
You want to spin the wheel? Do the raffle?
How do you want to do it, Josh?
So I put everyone's name in a wheel spinning thing. So did you ever let everyone know already?
No, nobody knows yet.
Okay, we're just going to do a 25K giveaway to everyone in the room right now for showing up. I've got everyone's name and I just typed it in. If you came in after I typed it, I typed pretty fast, but if you came in after, sorry. Here we go.
Spin the wheel. Who wins?
IMAD CME.
Who wins?
25K. IMAD CME.
Yep. Cool.
There we go. All right. I'll send you a message, IMAD, and we'll get you set up.
Lucky dude, man. I didn't win nothing, Josh. Come on, man.
All right. You'll get the next eval, I'm sure.
Yeah, I just want some more of those. What are those called? Those dum-dums? I love those little things, man. Those dum-dums. Those suckers that you eat at the bank.
All right.
I like those. You are a dum-dum. Yes, it's good. I'll have to see if I tried dinner because I'm eating dinner as I'm doing this. But yeah, guys, it's awesome. I'm glad you won. I just wanted to surprise you guys tonight, and we just did a giveaway. Isn't that cool? I talked to Josh. I said, "Hey, man, we don't never do a giveaway in my room. Let's do one." He's like, "Hey, that's a great idea." So you guys come to class. You never know. We might have a giveaway or do something to keep people interested. But yeah, congrats. Congrats there, man. It's awesome. I'm sure we'll be giving them more away as we go. Things we'll give away, guys, but it's cool. Good job, man. So basically, guys, on a higher time frame provides a stable direction. You know this, okay? The lower time frame creates liquidity and favorable prices. Okay, so that's the only thing you got to look at. on those two. But if you draw the lines around those boxes, you're going to see that works. Okay, it really does. Because what you're looking at, guys, I'll tell you what this means. This is detailed for you. Okay, if you take this right here, this box, let's just say this is our contraction box right here. This is our contraction box, right? This right here means this is where the big, oh shit, what the hell's that? It's freaking all crazy over here. What the hell's this thing doing? Okay, never mind that contraction box. Let me get the word from this crazy shit. I'm being freaky over here. Okay, so this contraction box, guys, tells you what? This is where the big boys, are watching the market. And you draw this, okay? This is what they're looking at every day. Now, the reason they're saying this is because they want accumulation distribution cycle out of this, which signals incoming volatility. Nobody knows that volatility is flowing through here like a high-speed hurricane. The volatility is going to come right into this box. Even though these candles are sideways, they want you to think, oh my God, it's a sideways market. What am I going to do now? That's the whole theory behind it, right? Now, expansions of these. This is your expansion line, true value line. This is the true value of the market. This is what gives you exact profit target and risk management points, okay? That's what it's for. Because it's going to tell you if it does this, right? And just kind of comes back down and then tests it again and closes. It's probably just going to all last, guys. More than likely. 9 times out of 10, if you're above this line at the open and it comes down and breaks this line and comes back in the open, you're going up. Okay? Every time. If it's under it at the open, comes back and tests this, you're going down. Okay? Now, what you can do to make this even better, and I'm going to show you guys how to do this also. We'll leave that box over there up. As you take this right here, draw that line right there. Oh shit, that garage is crooked as hell, man. Oh my God, I've been drinking. I ain't drank nothing. So there you go. So you come across here like this and draw this line. Okay. Now, what you want to do is you can think about every time the market does this. Every time the market comes up, guys, and does this and gets a high candle, even if it drops low, okay, even if it drops low down to here and stops, just watch this, guys, and goes back up again, right? And then just kind of peters around and that's stupid. Then it goes back up here and makes another high. And it comes back down and does this dumb shit here. Then it comes back up and makes another one up here. Now, what I want you to do with these charts, these highs, this one, this low, this high, and this one. You see the highs, the high of the candles, okay? Or the lows, can be the lows too down here. If it went down, it'd be this one here. You need to watch these every day, every single day on these high target candles. Why is that? Why do we watch those? Okay. Right here is why. This is why right here. I'll show you what I mean. Let's take this over here and grab this. I'm just going to barely put a line here. Put a line right there on this candle. Well, actually, I won't use this. That's too damn big. Let's just get rid of that and go to this. We're going to mark this one, right? Okay, so we came down. We're going to mark this one, which is a sell level. We'll mark that one, okay? We came all the way down here. We're going to mark this one, okay? We came back up to where the high was, which was right here now, right there. See that candle right there? That's higher than these. I'm marking that one in here, okay? I haven't really had anything higher than that. Okay, so basically, this will tell you, guys, where your liquidity is. That's your liquidity every day. They don't explain this to nobody. Okay? I'll get back in that second night trader for you. So, guys, you mark the first candle that comes out like this. It goes up in the morning. if it's a 9:30, 10:30, whatever candle comes up, you mark that candle across, just like this, and you can see it on your chart. Okay, it comes down, you mark this one. Okay, because the next time it breaks this liquidity level, you're going to take the short. Okay, the next time it breaks this, you're taking the long. So it comes down, makes this high. So you already know that. Oh, wait a minute, the top of my box right here has now become a liquidity level sitting right here, and you're going to see this shit happen too. So you'll mark this level. So when it comes back up, it goes through it right there. Boom, you're moving up into this trade. So now it's across here. See, nothing has crossed this liquidity line, not one time. You guys see that? It's better preferred to be on a higher time frame, night trader, but you can use a 5 minute because we're on the 5 minute now. But now watch. If we go to the 15, see the difference? Look at that. Boom. Done. Test. Come out. Right here. Contraction. Close. Done. See the purple? Boom. Done. So actually the white right here. I used the purple this morning because it's 95 we had. So see the 95, you guys, I kept calling you guys at 95. That's my own contraction zone from way back. Okay, but this is the permanent one right here. So 107. But you can see how it come above this, come out and close right above the line, just kept on going. There's that liquidity level. See, we haven't crossed it. Look where the liquidity level was up here, top of it, but it's actually this candle right here, right there. So this thing flowed out through here. And see, this was the liquidity level over here on this one right here, this candle top right here. So see this? You're kind of like right in here. So it came up, closed, you took the trade, it broke the liquidity level from this candle here. Boom, it's got this liquidity level here, and it's gone. It's been a new liquidity level up here now, and nothing's broken. So what's it going to do? It's going to come back to this one, from right here. And it's going to come down to here and here, if it comes down again. So this is the way you can mark those on higher time frames. Now, if you really want to see that really actually be crazy, look at this. Look at the 1 hour right here. See this? Contraction, phase 1, contraction down, phase 2 down right here. There's phase 2. Here's trend phase. Boom, done. Went up, pulled back, came back in. Just stayed above this line. So if you're above this line, guys, most of your day, if you're above this, you can hold. See how you hold this? Now look at this over here, for example. Look at this. Look at this one. Same thing, guys. Look. Contraction. Phase 1, right? Which I call phase 1 under. Tested. Hit it. Sold. Off. See? Right here. What do we do here? Liquidate. Right here, guys. See what I'm liquidating here? Liquidate. Come back up and go back. See the liquidation zone right here, guys? Where we say we're liquidating. We're, liquidating the assets. We're getting rid of this shit. So we're getting rid of it, right? Because it broke the top of this. It broke above this line of contraction. We don't want to be in a short on a contraction line that's above. So now, guys, here's how you use this. But you come down to a big-ass short. Boom, you go contraction. And you're in this short. How do I know when you get out? Easy. You wait through here. You hold this trade through here. You just hold it. In a minute, it comes in top of your box or breaks above your middle line. You close it. You're done. Because that's it. That's what they're going to do. They're going to take it out. They're just going to play it and say, well, guess what, guys? We're going to make this thing work. But they don't know this. They don't know what's going to happen to them here. They don't know that we're actually going to do a liquidate your inventory on these guys. And this right here is a liquidate your inventory move. See, we come into a short right here because we're under our line. We took this short right here. It closed under. Boom. We start looking for 10 contracts, 15 contracts in. We're going to liquidate 5 or 6 contracts. Let's say we got 10. We're going half here. Or maybe not even half. Let's say we got 10. We're coming all the way to here to this target. We're pulling back a little bit. I'm going to go to 2 contracts right here. 2. And let it go across. And the minute I see it cross this white line that I just drew, I'm out. I'm done. Because this way you'll know, because guys, if you see a contraction and you draw your line, guess what? If it goes under the line, you're staying in the shit. If it goes under the line, even if it goes on your line and comes down, and you say, well, I'll get out this target. Or if it comes back to the line and tested and goes peaks above it, just get out of it. But this will give you a perfect reason not to take another trade because you definitely just sit in this shit. Look, see this? Sold off, right? Look at this. Sold off, come above, sold off. If it's playing in your line, you don't touch it. You don't even mess with it until you get a candle to close under or above. You just don't even bother with the shit. See, there's the close below. It went down. It contracted. It came above my line right here, out. Of course, you would have lost money here if you stayed in it, but you can stick it to the target and get out. See, this is a buy target anyway. It's my buy target, so I'm out right here anyways. So these are my buy targets, and these are my sell targets. See my buys and sells and the reds and greens? So I know where they're at. But if you go back here and look, though, look at this. Let's do a big example for you guys, like this right here. Look at this, right here. Contraction, contraction. There's your big line you just drawn. And look at this shit. It's above the box, right? It contracted, it made its other one. It made a no one right here. It contracted, went sideways. But look, closed above and just absolutely took off. Look at your entry right here, guys. Your entry is 812. Where's the exit? Right here. 14.8 to 15.4. So you guys see what I'm talking about, though? How you can do this? You guys see how this works? I mean, it's absolutely good because what you can do. What's going on over here now? What the hell is going on with my writing thing over here? Okay, I got some weird shit going on. Undo, I guess. Where do my little things go? Oh, there they are. Cool. Thank you very much. Okay, so basically what we do is no matter what, okay, no matter what you're doing in a contraction, and market contracts all the time, guys. So it contracts, it contracts, it contracts. You draw the box, right? Just draw your box, put them in a line, and you watch. Okay, it does this, does nothing, and all of a sudden it kind of goes above it one, not very big, but the next one closes right here. Boom, 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 and you're in. And then it goes back up here, say it goes to right here, and it starts doing the same thing, contracts right here off of this move, right? Draw your know it right here. You come down into here. You're holding this long still. You're still holding the long from right here. Here's your entry. Okay, put E for entry right here. This is where you made your entry at, right here. You're going up, you're waiting. You got 5 contracts to here. Okay, you're getting rid of 3 of these right here. You're going to contract with 2. Okay, 2 and 3 make 5. So you got 2 contracts in this. Now we wait. We draw another line. It comes out and just barely peaks down, comes back up, test, 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 and then what happens? This one here runs up, 50 to 100 points north of here, and you just scored big on what we call the secondary move. You scored on the trend phase because here's what you done. You come out and tested. You broke out. You come back. You redid it again. You tested this over and over and over and over like this, maybe a little bit here. You stayed in it, but then you came up. This right here, the candle closes above this level again, right here. You know you're gone. If it drops back below it, you can put yourself like what you do is you use the bottom like this, guys. Watch, I'll show you. Let's do this. Just pretend for a minute, this is this box, right? All the candles are in here, go around. So basically what you do is when she comes up like this, guys, what you do like this, when it does all this bullshit like this, what are you doing for a stop? Right here. This is it. This is a no-go. If it gets down to the bottom of your box, you got to get out. Okay? If it crosses your line, you're fine, as long as it's not 30 or 40 points down here. Look at your box and see how big it is. If your box is like this, like a huge box with a big zone, and let's say this is like, let's say this is like 60 points from here to here. Okay. You don't want to do that shit. Okay. So if the market does this, okay, so let's say you took a big long over here. Let's say you took this big giant long. What the hell is it? Say you take this big old giant long that come up here and contracted. Now you're waiting to go re-long. But you've got a big marker like this. So then you have to use this line. You have to use it once it kind of gets under here. If a candle closes under this, you have to exit the trade. You have to on a close, because it's going to kill you. Okay? Always think about that. But if it don't ever close, it don't matter what the hell it does. If it just plays in it all day, you're going to get boom, and it's going to run. It's really going to help you guys. This will help. This is more information I've ever gave out to anybody, but you guys are with me all the time, and I want you to be successful. But you can just start drawing those around. Close on the 5 minute. Yeah, close it and be done, So this way you know how to kind of gauge where you're at in the market with your entries and exits, because this will help you with entries and exits. And you're always going to have these. Every single day you're going to have this happen. Every day, over and over and over. And how I know this is look at this, guys. Let's go in here. This was what? Let's see. Go back here and look. Okay, look at today. Look. Let's see. What's this? Time is it now? This is 6 o'clock, right? Yeah, 8 o'clock. This is today. We only had one today, but that's on the 1 hour. Let's go this one. 5 minute. Drawings. Okay, so we'll go in the 5 minute. One. Got one here tonight already. 1, 2, 3, 4, 5, 6. There wasn't one here. There was one here. 7. 7 this morning since 8:30. So see what I mean? You're going to have ample opportunity every single day to score this. There's one. Boom. Okay. Here's your other one. Boom. Here's your other one. Boom. Over here. See what I mean? Every day. Ample opportunity. Yeah, if you're in a big move like this, off this contraction phase, if it comes back down, if you're in a big move, like if you came down to a big move and you're still trying to go short on this, if this thing crosses this blue line, you got to get out of it. Especially if you're in a big short like this. See, if we're in this big short, guys, we hold right here and we wait and see. But see, I already got a line down here. I know to get out. But pretend like this line's not here and you're just going across here. As soon as it gets to here, guys, and if it makes a candle above this line, you got to get out of it. I get out. As soon as I see one candle coming up above this thing, trying to grow, I'm out of it. I'm gone, because I don't want that. I want to be out and just liquidate. Like this one here. See, it came down under, and it came back over. If you took this little short here, you're all right. But once you come back above this, you're done, kind of thing. You guys get the concept out of this now? This is definitely something you can do, and definitely will work for you. How do we identify contraction? What are the rules? Okay, easy. How you identify it? Perfect. Every time you see the market, every time the market wants to do its dumbness, a sideways move. Every time you get a sideways move, you'll see contraction. No, it's not a buy and sell indicator. This is market maker. Yes, choppy markets. You're right. They work perfect, Harrison. We're making money where people don't know how to. I'm teaching you guys how to make money off of other traders that know what they're doing. So this is what you're going to do. This gives you a leg up on everybody else in the market, because they won't know what the hell you're doing when you take big trades off of this. Okay, if you're using Trade Terminator, you're going to get these signals anyway. You're going to get this short right here anyway, and it's a short already. So you're under the ATR. Boom, you come in. You stay up. It goes below this. I just stay in. So it kind of works. I like to see at least like between Sometimes a contraction phase can be like 5 candles or 6, but normally if you'll look, see, this only got 1, 2, 3, 4, 5, 6 of these candles, but it's actually 7. But in theory, it's really 9 right here. Okay, this one's got 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. Usually contraction's always between 7 and like 12 most of the time. See, here's 1, 2, 3, 4, 5, 6, 7. So it's usually between 7 and 12 candles, guys. It's usually never more than that. It can be, but I'm hardly ever at nighttime or something. It will be, but see here, look, 3 o'clock. This is like 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13. See, so it's got 13 here, but that's because it's a big move. The bigger the move, the more contraction. By the way, the bigger your move, the more contraction. Okay, look at this: 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. 10 because it was flat. 10 contraction, boom, gone. And you always know by the top of your box that when it breaks the top of your box, guys, you're looking for a long. When it breaks the top of your box or the bottom box, you also can gauge this by stuff coming down. Because 9 times out of 10, when a market contracts, it has to break the bottom of the box to stay short. See, contracts, it's underlined, it needs to be under this box level right there. And it usually will take a short at the end of the box and go boom, just like this did. So now you know to take your bottom of your box, right? Like this. I can find this shit right here. So now you know, like this, guys. If you draw your contraction box like this, right? And your market goes like this, and it comes up in here, right? Like this, and it goes like this, and kind of just messes around and does this number here with an M pattern. You're looking for this right here. Here's your line. Okay, it's coming in your line, but you're looking for it because 9 times out of 10, it will stop right there. 9 times out of 10, guys. And if it doesn't stop, guess what? Closes under the box level, and it's done. It's perfect. You guys will love it. You guys are really going to love the theory behind this because it will definitely help you figure out a lot of shit that you didn't really know. Because they don't want people learning this. They don't. They just don't want people learning that. They just don't because they just keep it to themselves. I want to see if I can find this thing on here. If I can. Okay, so basically the difference between this. So what it is, guys, the mechanics of this is what institutional and big money traders method. This is the methodology of a big money trader. And it has a very, very high success rate. I mean, high success rate. Okay. And with Trade Terminator, it even makes it more of a high success rate. Okay. It makes you aware of the price sensitive levels. Okay. When I give you insight, what's really going on in the market from an institutional perspective. So when I look at this, I know as an institutional trader, I'm thinking to myself, okay, fine, we're going to go sideways. That's beautiful. I love this shit because guess what? We're going to move up off of this line, and it's going to do this and close above, and I'm going to get candles just the whole ass, or we're going to move below, and it's going to stop right here and go back and retest this and then close an all ass, or it's going to come to here, close under this, and go this way because that's the scenario. That's it every time. No, they don't draw them automatically. You have to draw these on your own. But they're easy to do, guys. Easy. You just look for contraction, draw a box around it. That's all you got to do. Just take the top of your candles, just do like a support resistance. Okay, like this right here. I'll show you. I'm going to show you how to do this. Okay. Yes, honey. Okay, hang on. I'll get with you in a minute on it. Shit, I'm going to do that crap. Okay, so let's just go to this one over here. Let's go to this one right here. For instance, right here. See this? These candles? if you come up here at this trade and you watch this trade, you've already seen this happen. Now you're here and you're seeing this happen. Okay, so there's your right there. Okay. You can also draw it like to the bottom of these. You could, but I like drawing a little lower. Okay. So I'm just going to draw mine like this. Right there. So you're here. Just make a little circle. Just circle around it and put a center in it. That's all I really got to do. Don't just circle around these candles, but always know where the top candle is. Okay. Always mark this top candle for one. And you can mark this bottom candle right here. See the bottom candle right there, guys? This little red one? Right here's the bottom. So there's your bottom. It's like this little red candle right here's got a bottom on it. So let me get this off of here. It's kind of a too wide. See the little candle bottom right there? It's red. Right there it is. Red and top. Top and bottom. It's almost like a little support resistance level. But it's not. It's a contraction level. So you'd mark it here and here. Right? What the hell is going on? It just disappeared. There it is. So you would draw your box just like this. Circle this area. Okay? And then you draw your line in the middle. Just like that. There you go. And now you know when she closes above this line, right there, is your trade. Right? If it closes above this line, this is your trade. Just like here. Close. Right there, that's your trade. Going up. How easy is that? That's easy to learn, guys. Easy. And if you can get this, if you can learn this and trade the room with me, it's going to make you a really good trader. Because we can say, hey, I will say, guys, there's a expansion tomorrow. I'm going to say, guys, there's an expansion area going on. Have you marked it? Or let me know, hey, Mike, can I mark my expansion zone? Is this right? I don't know if it's right, but look at mine and tell you. But you want to turn your trading around? This is the way to do it. And this is coming from institutions. This is coming from guys that make big money. This is why I've put 15 contracts. This is why today, you guys seen this today when I was on the charts. Well, if I can go over here and get this damn thing off here. See where we at right here. It's 4 o'clock. Or is this right here? This is this morning. Yeah. This is why you guys seen this morning. I took this long right here because it closed, just barely closed, but I took that. So I took that one there. But this is why right here, guys, when it closed right here, this is why I went 15 contracts deep from here to here. It held it. It was $44,000. And that's why. Because it will make you money. Have you throw Trade Terminator on it? Oh, man. It's really stupid then. Because you get the signals from Trade Terminator, and you're like, oh, shit, there it is. There's contraction, signal off Trade Terminator, I'm gone. Over the ATR. And usually the ATR will come in right here, somewhere around this area. But it's cool, though, because it gives you an extra opportunity in the market. This is something that I think will help a lot of you guys. Especially for struggling. Now you can practice with this, drawing these, and you can practice that, 1 contract or 5 micros or whatever, and see how it works for you. Because I'm telling you guys, this doesn't have a 30 or 40% win rate. Okay, this right here with me is about 96% win when I do this. When I do it the right way, it's about 96% win rate. Yep, and see, people get out because the market's sideways. $16-hour and 18-hour should be part of contraction under. I don't know what you mean by 16H and 18H. What are you talking about? What do you mean by 16 and 18? I'm losing the air. Oh, you mean 4 o'clock? Yeah. Yeah, right here. Like 4 o'clock and 1800. Like here, yep. Right there. Now see the next one's over here. Oh, let me go look and see what the next one's at. See, we're here now. Look, see the little tiny one right here, right now, guys. So mark this one, guys, right here on your chart right now. Mark it. See it right here? It's right there. It starts at 9. It starts at 7:20. Right here, 7:35. Right there. Just mark that. Just mark these 1, 2, 3 on your 5 minute. mark this and try this. Let's see if you guys can draw that. Let me know if you guys draw it. Draw it and do it. Put it on your charts, guys. Okay, good question, Renaz. I'll show you. Okay, watch this. We get rid of all these damn drawings. We all can see shit. Okay, so how do you know how to do this when you're trading it? Okay, this closed right here. Your stop loss goes to either A, to the body of the middle candle inside of your box, the middle line in your box, at the body of these candles, which is your middle line right here. You put your stop loss above this line right here for your short, or here. It goes here on this box, or it goes here on the white line. That's your stop loss. And it just goes down. You want to have it on the, you can have it right above the line, or you can have it up here at the top of the box. And all you do is wait for profits. And then once you get to a target, like down here, you can just hit this target right here. See how I hit this line? It's right. You're going to see this too, guys. It's going to come right down to your last box. Then your last box, and leave them drawn. Don't take them off. The reason is because if this comes down and breaks this box, you're already going to know that the big market guys in the market makers, are going to take this box and go boom, right down to this level. So see, you've already got your next target here and here lined up for you. You guys see that? It's beautiful, isn't it? Because see, now what you're doing, you're not only just drawing this contraction box here, guys, but what are you really doing? What's the real thing behind this? You're drawing the secondary and big money players in this market. That's what you're drawing. You know exactly where they're at and what they're trying to do. Well, the reason they start on certain bars is nobody really knows, Scotty, but they happen on just sideways moves. You got to have a sideways move for contraction. Okay, so you just mark them all, every one of them, and you wait. Because on every one of these, you're going to get a move on every single contraction phase in the market. Look, every one of them. They all have moves because that's what they're supposed to do. See, this one didn't do great, but it went down to the line, right? See, under the line, short. Look at this shit. Look at that short. It's going to be hard to do it. They're going to be, well, I guess you draw it with the Renko. That's perfect. Renko's work too. You can draw with Renkos too, guys. You can draw with Renkos. You can draw with Renkos. You can. I prefer mine with Heikin-Ashi, but you'll notice on Renkos, especially the NQ and YM. Now, the NQ and YM guys are both good with Renkos on this. I like gold and oil, but gold and oil is a little different, especially on Renko chart. Gold and oil, I always leave on my Heikin-Ashi charts when I'm drawing. Well, that's just called how you got to know the market. So how do you know when to draw? Well, they're usually either after a big move up or a big move down. That's Scotty. I mean, usually you always get contraction after big moves, always, or a flat market, like right now, a flat market. You know what I mean? It's a flat market. See, you're kind of got a flat market, so you got one. So it's either a flat market or a big move up or a big move down that these contraction zones come in, and that's how you figure it out, guys. If it's a slow market, contraction, big move up, contraction, big move down, contraction. Can you share insight on the two contraction boxes next to each other between 11:30 and 12:30? Yeah, the reason this is colored, guys, is because see this box here. This is what we call a major expansion, which I can't teach you guys that right now because you're not ready for it. But I will do it next class. But this one's a lot harder to deal with because it's going to take a lot to draw this because you've really got to know a lot of shit in here. But this don't mean nothing. All this really means, guys, is this gray box turns to blue. See, on mine, because it's telling me these are major league buyers and sellers on the blues. The whites are the minor. These are like the $5 million traders, and these are the $1 million traders. But the thing is about this, it doesn't matter, guys, because you're going to know when you had a big $1 million, $5 million trader because it's going to close right here. It's going to outlast us. No, it's not. This indicator is not available to everyone. This is something you can't get, Scotty. It's not available to the public. This is an institutional chart only for, it's only been given out to certain institutional traders. The guy only gave like 10 copies out, 15 copies. And we all traded with him before, so he gave us an old test to see if it worked. It works beautiful. I love it. So he's just testing before he releases it. It will come out to the public, I think, next year. We don't know. But anyway, I'm just showing you guys how to pick up on it and use it with me. So if you're seeing it during the day, you know what this means. If I put this up, I'm gonna have this up tomorrow, and I'll let you guys just kind of look at it tomorrow and draw yours as it goes along tomorrow. This way you'll know. Or we can do it on Auto Trader, do the same thing. I mean, I can draw them, but it's really kind of a cool concept, and I think it will turn your trading around. It really will. Now, the other thing, let's go here. See Rico's? Same thing. But the Ricos are a little different. Ricos can be crazy. But see, you're not getting that sideways contraction a lot. You've got to really be able to identify where in a Rico chart, you've got to really be able to identify really what's going on. It makes it a little harder for Ricos, guys. But see what I mean? It's a little harder. You can't see zones with Ricos because there's a whole different ballgame with these. So we'll go this next time. Because see the big move here? It's a whole different ballgame. Those Brincos. It's not really considered what we call a sideways market contraction zone. It's pretty much what I call stacking zones. And the stacking zones are hard to spot. They really are. No, it's something I know why it's there. On the contraction thing is based off the moves in the market, and you have to know a contraction zone or you can't trade it. So that's why we put them there. So to answer your question, you're saying it's based on them and not something you know why they put there. Yes, I do know why they put it there because I've been drawing for years. I already know contraction levels. I don't have to have it on my chart. So I've been doing this shit for 3 years now. But the thing is, I'm sharing it with you guys to try to learn this because, Scotty, if you'll learn this, bro, this will help. This is going to help you take better trades. It really will, man. It really will. You can get it on and it's better off to use Scotty with a Heikin-Ashi candle, like on a 5-minute, 10-minute. But if you guys got time, put it on a 5-minute chart and then throw it on a 15 or an hour. And do the same thing. Because if you go over to your hour chart, say you're trading in the morning, you got to be somewhere, right? And you see this sideways move on the hour chart right here. You're watching this sideways move in this hour chart, guys. And the next thing you know you're going to get a move off of this. It's going to come down. See, look, test it here, come down. Look at this. This is perfect. Contraction, phase 2, come back up, trend phase failed, come back down, closed. Close right there, guys. So let's say you're watching this and it's 11 o'clock in the morning. Boom. Straight down. Like I said, how you know, Scotty, is you have to watch the markets. You're going to be, because spotting a sideways market is easy. I mean, you can see a move come up or a move come down and it just does this shit. And this is what you're looking for. You're just looking for all these sideways candles. That's it. You're looking for sideways candles. Draw a box around them. If you only see 2, don't worry about it. If you see 4 to 6, then draw one. Okay? About 5 or 6 candles, 7 candles, draw your box. That's how you know, Scotty. Just take. Let's say for now, 5 to 10 candles, draw your box. Every time, guys. 2 of them, 3 of them, don't worry about it. If it's 2 or 3, don't worry about it. If it's 5 or more, 6 or more, draw them. See, like this one. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Right? This one. 1, 2, 3, 4, 5, 6, 7, 8, 9. This one. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. See what I mean? It's always usually between. See, you don't have to draw this if you didn't want to, because didn't do shit no way. But it would have been back here for me. I'd have been drawing from back here. My box would have been starting right here at this sideways candle right there. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. I'll draw them bigger than what I got on here, but see this one here? Same way. See, it's only got like 1, 2, 3, 4, 5. There's that 5 candles right there I was telling you about. See, they're always between 5 and about 5 and 10 or 12. See this one? 1, 2, 3, 4, 5. Boom, gone. This one? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13. So they're going to be between 5 and 12. It could be 5 and 20. If the market's sideways all night long, it'll be a sideways move all night long. But the good thing is, if you're trading this over here, what the hell is this thing doing? Okay, we're in the 1 hour. Why? So we did a 5 minute. If you're trading the market all night tonight, and you're watching this shit, you already know. See, look, see how it's closing right here? It's closing under this right here. See that? That's your close. This is your 40 moving average sitting here too. So it's probably just going to come to here or come to here. If it breaks the 40, it's going to come to here and break this box that you just drew over here, and it's going to come down to the bottom of this box, and then you wait. Either breaks the bottom here and goes down, or it pulls back to where? Right here, pulls above this. It's going to go back to the bottom of this box and tag this to the top of this box and stop. It's pretty easy. Yeah. So you just have to play around with it, guys, and see if you can figure it out. But see right here, I would have drew this. I'd have been over here drawing this like 1, because it starts here 1, 2, 3, 4. It's 4 here, but it's over here on mine, and this is not really considered as sideways because you went down to a target here. You get that reversal off of this. So you came down, you went up. So basically, you're way up right here, and you came above this line. Okay, so you just have to. It's going to be hard at first, guys. You're probably going to make a few mistakes with it, but the concept is just trying to focus on getting the 5 or 8 candle moves. Don't worry about anything. Don't worry about no candles like these right here. See, like 1, 2, 3, 4, like right in here, because this candle don't count. It's not sideways; it's down. Okay, this is your weekend candle anyway, right here. So this weekend candle is telling you it's reversal. So you really don't count the weekend candle because it's a reversal. This doji don't count either. So you just don't even count this. You're wanting it to go sideways, just like this, and just like this right here. And it happens every day. Big moves. Anyway, guys, I hope this helps somebody. Hope you guys get something out of this. We had a good class. I think I'm going to jump out of here and we're about tomorrow, man. But what do you guys think? You like this, guys? I think it will help you guys. Some of you guys will probably get this and probably like, hey, man, check this shit out. Share it with me tomorrow, guys. Share it with me tomorrow and let me know what you think. And let me know if you make money off of it and things like that. Because we can work together, and try to make you guys really good at trading. And the ones that are really good already just get better. But the ones that are kind of struggling, we can try to make better. You're going to be up all night testing it? Yeah, there you go. And that's the thing to do, man. You can work on it, guys, and just kind of go back in your charts. The best thing to do is go back through some of your charts. Go back. Let's say go back to yesterday or go back today. Go back in here and just kind of look for them and see what you can do. And, hey, we can, check them out and do it. But we'll do it in the morning together. I'll bring it up tomorrow morning, let you guys see it live. And then you can draw them with mine to make them match mine. So that if you draw them with mine, guys, you're going to be spot on with me all day. But this way, in case I'm not here, I get sick or something, I just throw my chart up. You guys are going to know how to read this now. So if I get sick or I have to go to the doctor or dentist or something, and I say, guys, I have a dental appointment. You're going, okay, Mike's right. There's our contraction. And so I said, no, guys, it's in the phase. Don't take no trades. It hasn't closed above yet. And you guys can remind each other of this shit. And guess what? Everybody will be on the same page. Boom, right here today. This was beautiful right here. This was a good move. Teamwork. That's what it is, man. Anyway, guys, thanks for coming to class, guys, and I hope you enjoyed it. And congratulations to the winner up there. See, I mean, I can't believe you won. That's awesome. He just plays a spin the wheel game. He spins the wheel and picks out one of the names in the hat. And that's what he does. You know, he writes everybody's name down and puts numbers on them. And he spins a wheel like a real one, and he picks the number, and there it is. Well, M3, the reason I do it is because gratefulness is a good thing. I mean, I don't know if you guys, I know you guys, some of you guys might not be religious, but I'm not one of those people that force it on people. But I do believe if you make a deal to get better at what you do, it's okay to pass it on to somebody else because it comes back to you. That's what I believe, truly. I truly do. Anyway, guys, I'll see you guys tomorrow morning at 9. We'll get this thing done again tomorrow. You guys have a good night, man. Bye, everybody.
You guys still on?